All right, what's up, guys? I'm going to try to cram a few things into this video. Show a recent trade, talk about some things. It's been a good summer for trading. Conditions never really slowed down to the point where it was, time to take a break and wait for things to come back. It just kept going. And it's almost September now, so onward. I expect a lot of volatility, strong trends, big moves, clear stuff, high volume, nice things. Volatility is a good thing. Coming, September, October, November, definitely. Um, but I think we're in for a good volatile time. I like where things are going. So, what do we have to talk about? A few questions that I get, I'm going to ask you guys. How's that? I have some questions. One thing you can always type in the comments. Let me know. One thing people ask me about sometimes is back testing software. For me, I haven't back tested in years, and when I did, it really came up short because of the way I trade multiple time frames and volume, and I need to know when news releases are, right? I factor that in, and whatever things that are going on in real time that So I know it's a lot to ask for, but I don't know. Maybe things have improved in the years since I've back tested anything. Um, so let me know. You can type in the comments. Um, and let me know if there's any good backtesting software that gives you ideally volume and multiple time frames. At least those two things. Um, volume, multiple time frame. I'm looking at at least three time frames ideally to do it right. Daily chart, 1 hour chart, 5 minute chart. But let me know what you're using when you have. If you're able to kind of backtest my method and kind of do it like it's as if it's real with any software that does exist, then I could recommend it. Next thing is, all right. Well, people have been asking for recordings of the live sessions. People that can't attend. For me, it's 3 a.m. So particularly people in the West, in the U.S., are not typically able to attend if they have a day job and stuff, or whatever. It just doesn't fit their schedule. So normally, what I do is if I record through, I'll try to explain this. It's really exciting. If I record through GoToMeeting, it takes forever to download the file from their server. It's not my internet. They just take forever. Sometimes it takes longer than the session. If I do an hour and a half, 2 hour session, it could take 3 hours, 4 hours to download it, which is just crazy. Um, so then I started recording it myself with QuickTime or OBS, these things that I can do my own screen capture. Then I'm playing back these long recordings up to 2 hours long, and at some point in the recording, the image starts to freeze up, even though my computer has 16 gigs of RAM that I'm using here and nothing's freezing up and everything's going fine. And then I watch the video and there's freezing in the video, in the images. So there's that. I'm not able to record it. So let me know if anyone has any ideas for that. Some sort of screen capture software that's not going to like glitch on me for long recordings. Or any sort of solution for that. Just trying to address these things that I get asked that I don't have answers for. Um, Now, of course, if you attend the live sessions, you're able to record it for yourself. Maybe someone that attends the sessions would want to do that and share it. I have no idea. I don't know. Maybe you guys can figure it out. Okay. Because I get asked that like 3 times a month. Can I have a recording of the sessions? I can't attend. It doesn't fit my schedule. Okay. Next. I did want to ask, and also I'll show a trade last week we took in the session. And it's a good one because it's a little different. But last thing I wanted to ask was for those that purchased my course, and it's been on sale lately for a lower price, so a bunch of people have bought it, and I want to know how you're doing. Do you have any questions? Um, Things have been good lately, so if you're looking at charts and looking for setups, they've been there. Um, I've been doing well, and so let me know if there's anything else I could do in videos, or if you need to attend a live trading session, at no cost if you bought the course, just to kind of ask any remaining questions. One thing I get is often from people who buy the course is that they are still sort of mixing what I do and teaching the course, which is like 13 hours. Some of the material repeats to be thorough and really nail the points, but it's a lot of material. And so they'll take that and then also combine it with other things, which now you're just heaping on things that are may be completely, contradictory to what I'm doing. Um, Even the traditional VSA stuff and the trade guide software and labeling the bars and the sideways up thrust. Is this an up thrust or a spring? Um, Candy bars, all kinds of bars. Memorizing, names of things instead of understanding it. The main thing I'm teaching is understanding what's going on in the chart. What is going on? What is going on? What's the story? Who's winning? Who's losing? What are the winners doing? Can we do what they're doing? What are they probably going to do next? They're doing it. Let's do that. It's we call it whatever you want with these bars and things that people have to memorize. I think from the way they trade VSA, I don't know. But mixing all that and trying to be, so exact on your definition of what a candle is, but at the same time, not even knowing why you're calling it that and what it really means. And in the context of what's going on at the moment in that day, what does that tell you about what's going on in the market? Rather than saying, okay, that's a no demand. That's a gotcha bar. Whatchamacallit. Um, so I would put everything aside. We don't trade news. Oh, it's positive news, time to buy. Sometimes we're selling, whatever the chart says. It's all about the chart. So understanding the chart and the storyline and what's going on and why you're taking a trade and completely understanding that is more important than anything else. That's the point of what I'm teaching. And so I wouldn't try to drag any other indicators or methods or anything into it and try to mix it all up. It's not that complicated. It's just has to sink in. It's really not that complicated. Okay, I don't know. I hope this is helpful. Let's look at the chart. So it feels like towards the middle of August to now, which we're nearing the end, things did slow down, and volume you could see on from day to day did slow down, but it was not untradeable. It was not, okay, we're getting to this point where we want to see something, and then nothing's really happening, and it's just dead. None of that stuff really happened, which again in August really can. But it did go sideways. We did lose some activity, but these ranges were completely predictable. And those of you in the live sessions, I've talked about these ranges were coming before they actually happen, and they're going to get stuck in the middle, but they're going to pop off the lows and the highs pretty quickly, and there may be setups at those points. Now, okay, so the range trade, right? We're always talking about going with a trend or going against a trend. We don't talk about range trades a lot. What defines a range? Obviously, if you're looking at the chart, it's prices going sideways. The highs and lows, you'll typically have fake breakouts. There's a low, there's a fake breakout. They're all over the place. There's the low here, there's a double bottom. That's not a break. And these little points can be fake breakouts and double tops, double bottoms. And you'll often get stuck in the middle and kind of sit around and go sideways, but the rejections off the highs and the lows are pretty quick most of the time. And that's really where the range started. But obviously, it's not hard to visually look at a range. The structure is starting to go sideways. We're not making any progress anywhere. Then maybe sort of trending sort of moves in between. But what the way we read a chart also, of course, is volume. And volume has to be telling you that you're in a range. So normally we're looking at a sideways chart and saying, is it, more often, is it accumulation? Is it distribution? Is it reaccumulation? Is it redistribution? And when volume is not giving you the answer to that, and you're going sideways, then it's neither. It's actually a market that is uncertain, and in this case, slowed down for the time of year. Not surprising, we did end up already breaking out of this range, and it was fairly big and definitely tradable. But looking at the volume and it not giving you anything clear, so sometimes you'll be able to predict a range, right? When you're starting to see conflicting signals, unclear signals. Sometimes you'll see high volume at a point where you normally don't see it. And if you know my method, there are particular spots where high volume tends to show up. And instead of, so you'll see it in a weird spot, and you'll also see not much of a result, and just of conflicting background with price going sideways. It's facts about what's going on in the market, right? There's not a consensus, and there may not, and combining with there may not be enough activity, and that's basically what's happened here. You can see the activity, day to day did die out. Okay, so volume. If we look at the background, there's one exactly what I'm talking about. So it's in a weird spot, and it has no result. I say weird spot because we normally see that stuff here or here, which was actually high, or on a some sort of up move with a downward reaction. That's just kind of prices sitting there for hours, hits high volume, and then sits there again. And again, you see this sideways activity really stuck for, in this case, maybe 12 hours, whatever it is. Um, there's another one. Now there may have been some news, whatever, but that is a symptom of a range. Again, here it's just sort of slop, right? And if we know what we're looking for on the 1 hour chart, that really, the method teaches, this is saying, okay, it looks like weakness. Then it looks like maybe those buying into here. This had high volume with no result, moving up, moving down, closing in the middle, doji sort of thing. And the 5 minute would clean that up. But again, it's very different from what we normally would see as a clean background, right? So combining that with the sideways price movement itself, obviously we have a range. In this case, I buy low, sell high. Okay, I feel like I'm taking forever on these points, but hopefully you're learning something here. Now, the last trade that was taken was on Thursday, right? In the live session, was here. And let's look at it in real time. We're going into this day, and we've already determined it's a range. Now, these are the boxes, again, that I teach that you guys should know that have the over the wick. That gives you an area to look for the setup. And in this case, sometimes ranges are not so clear. Like this bottom is very obvious going forward, right? Sometimes you have a couple of different points. You're not sure where to draw it from. Okay, draw both of them and see how it behaves when it gets there, right? So going into this day, this has been set for the last two sessions, as this was a high of this session, this day. And then the next day, it acted as resistance, did a little fake break, and came down. So going into this day, right, we have that as our as our resistance and our actual box, which comes off of this. Previously, to really say this may be the top of the range is also this. But once these are set and we're ranging, let's see how it behaves, right? As I say in these times on this day, I prefer to sell here because it may see some weakness and continue and then hit it. But if there's a clean setup in these areas and the chart communicates it's happening, then it's happening. Then I'm fine with it because it's a predetermined spot, and that could become the range going forward. Again, it was 2 days prior that gave us that level, so it's not just off a little whim. So then let's go to the 5 minute. And price enters that area here. Again, this was all in the live session. We saw this in real time. Here's London open. And then we move into this predetermined area. And immediately, of course, weakness. Highest volume of the session. Closing in the middle and rejecting, right? As soon as it touches that zone, right? It never actually reached the resistance, right? That's the high of the previous day. This is into the zone, which from into this point, we can look for the setups. And it tells you about sellers, right? Higher prices generally tell you about sellers, but when you get into these zones, think of it as a selling zone or whatever. So whatever goes on in here is going to tell you the sell activity, right? And we confirm weakness immediately. This is the 5 minute. If you go to the 1 minute, you'll probably see the high volumes really spike off of that. I don't want to jump around too much. Then we get, before any entry is confirmed, one more pop up. And I always ask for this stuff, and usually I get it. Get the one more pop up, fake break pattern, right? And there's the volume on that, which is healthy. And those of you who have the course, I talk about the unfinished U is a good way to put it, because it's a pattern that looks like you're doing a U underneath the double top fake break, but it doesn't quite go up all the way on the end of it. So like you're drawing a U and you don't finish, or a backwards J sort of. And that's the typical point where the activity into higher prices is showing you the sell activity. The second time around is typically not as much as the first, but you want them to show up. And this shows a building up of short positions in this price area, not just a one-time sort of profit taking, that selling would come in and then, be pulled into the market and then it continues, right? So we see that, slightly higher price, again, higher price daily bell sellers, and we get that activity enough to confirm the setup for sure. Now, there still hasn't been an entry here yet. And really, I like to see the 14 EMA tested or that's number one, and or an automatic support being tested. Again, those of you who know the method, this is textbook stuff here, right? So at this point in time, you have your automatic support. We've come down, and now as you're pulling away, right, we know this stuff. So the first level of support after weakness here. Now, going forward, that's here, plus it meets up with the 14 EMA. Amazing. This is what clean markets do. It's not an accident. When all the tools come together and just snap together and so clean, double top in the zone, the volume's high and low and high, and then this being pulled into here as a test area, right? What else could you ask for? These are picture perfect stuff. And now we want to see low volume. This is where we are testing for buyers. This is where we're testing for sellers, the zone. Information about sellers, high volume. This is where we're testing for buyers. Information about buyers, 14 EMA. Now, in real time, when this pushed through, as I call it, the push through, right? Closing at or near the low without high volume. And that's an entry. Is the volume high? It was enough for me to say, I'm going to wait. It's higher than the previous 3, 4. So it's enough for me to say, I'm going to wait. I'm very patient on my entries. If that was low volume, the lower the better. Let's put it that way, right? So that doesn't say it's a great entry. Now, we see that where it's not quite confirming for me. Now, the break test very often happens, and this is what we get. So the break test continuation of the automatic support, which you kind of see in the line, I guess. Nah, not so much. But it exactly touched off of that. Very clean. So we have break test continuation, and this is where, again, this price area is new low ground that we haven't seen since this stuff started, and we're trying to mark down what's up with the buyers, right? A little too active. But we hang out in this price area. It's all about price areas and what you're looking for there. And you see the volume, right? So this is all signifying no demand. All this, whether it's an up candle, a down candle, a doji, a sideways reverse up thrust. Is that legal? It doesn't matter what the candle looks like. It's about seeing the volume and the price area and the situation, right? And this tells us about buyers, and this is what happened on the volume, right? And I was just talking about this with somebody recently who's learning my method, but they're coming from the traditional VSA stuff, and they'll go, well, that can't be a no demand because it closed down, right? But the last couple of ticks before the thing closed, it could have been green, could have been the last couple of ticks, the last tick before it closed may have been a down tick. It doesn't change what's going on in the market, which is it's pausing to test for buyers and the activity is low. I don't care really where the last few ticks of the candle take it. I suppose you would care if you're trying to program software or something like that, right? But let's just understand this price area is revealing lack of buyers. This price area is revealing very active sellers, predetermined area, predetermined area. Where's the entry? My entry was after this candle closed. Now, I want to be convinced not only that we have sellers in position, buyers inactive. The last piece is I like to see it confirm that we're going into markdown. I could have entered here. It was not quite good enough, but I could have entered any time through here. And I said, and likely, I think I said, if I'm in now, I wouldn't really be worried. But price is sitting here, and I like what it's doing. Thorough testing. It's really showing me there's no buy activity here. Very little. Once we started pulling away and closed into new low ground, lower prices tell you about buyers, still low volume, then I'm convinced. And so as soon as this one closed, give or take, that's when I entered. I think it was actually, I took it a couple of seconds later in the demo, which I like to do to track the trades. And here it was 1805 was the price. So there's the actual exact information on the trade there. 05, I said, right? So 05. Okay, so it was after this closed, right? So on this candle. And now we're into markdown, right? And that was a good trade. And where's the stop loss? Allowing for the fake break of the, because I always allow for one more fake break for my stop. Because once it sets up, it may do that, but it's still high probability to play out. You don't want that to catch you. Where was it exactly? I'm trying to remember. 30 Tuesday. This was last Thursday. But if I'm taking this trade, I'm allowing for the fake break here. I guess it was maybe 40 or 39 or something. But I'm allowing, if I'm taking a trade in a situation like this, I'm allowing for this to do a fake breakout here, right? Because there's nothing wrong with that. For the day, on an hourly chart, doing a fake break, we don't want to turn it into a loss. It's a bearish pattern. So I stay out of the way of that. It would have to really break out in order for me to get hit. So that's the typical stuff. Again, if you're learning the method, you know that's the stop loss placement there. And for a range trade, obviously, it's very obvious. You're allowing for one more fake break after your entry. You're always going to get good risk reward with that stuff. We're entering off the high. If it breaks out, we're out. And then we have all the way to the bottom of the range for the target. If it gets stuck in the middle, going to Friday, take a little profit off, lock break even, or close it before the weekend, which gave you a little run on Friday. So, and at this point, we're out of the range again. So I'm not working off that range anymore. It's time to reset the analysis. But there's a range trade, which I don't show very often. They don't happen as often, but they are good and dependable, and volume could be total crap to your left, not giving you anything clear, and prices going sideways structurally. And there's a fairly obvious support resistance to draw the range. There you go. Looking for the 5-minute setups off of the highs and the lows. Mark your zones up to the fake break and look for the setups. So that was a very textbook 5-minute, which really convinced me. If it wasn't so good, maybe it would have gone higher and convinced me off of here, or I would have missed it, and that's fine if it wasn't that good. So that was the range trade. All right, guys. So I shoved a few things into this video. What was the questions again? Screen capture software that doesn't freeze doing long recordings. Backtesting software that includes volume, multiple time frames, news releases come up on the chart. That's probably too much to ask for. And again, for those who purchased the course, any questions, anything you want followed up, let me know. I'll make a video on it, or you can attend a live session at no cost and make sure everything's working, because things have been good and everything should be working good for you. Okay, guys. So meanwhile, we're almost at September. I never took a break this summer, which I haven't done ever, pretty much. The market always says, all right, you're stopping now. But it kept showing up and it kept going. And things were good. So we're already at September almost. And yeah, if you'd like to join the live sessions, we're doing that. Back to it today, Tuesday morning. All right, guys. So let me know. Give me some feedback and like the video if you liked it. All right, guys. See ya.